Good morning. It's Monday. It's 7/23, 2011. And the thing about it is the NASDAQ futures are gapping down roughly 45 handles. The Dow futures are down 208 handles. One of the things that we do here at Stock Market Funding is we talk about growth, yield, and how markets can be manipulated, and why we always tell you that when markets are being manipulated by high frequency and stocks are being bid up, and all of the mechanical things that go into the market, they always give them all back up. They give it all up, and they actually go lower. So, what I will show here on the screen, ISRG down another 10 handles. Priceline down another 13 handles. Apple down another 9 handles. Google down 8 handles. $8 is what I'm talking about. MMT's. Amazon down. This is your big gap down list of 100 penny ratio or higher, and it is long. Actually, some of them are bigger than what's being recorded right here, because when I take a look at ISRG, it got, and it's still overpriced. The stocks like CMG that dropped $97 on Friday and then had the nerve to think it could rally it back up to 316 and hold it. Stock goes lower, but it's still going to be best of the breed, but they're all going to go lower. We are fully in the earnings secondary week. Last week was the kickoff of the earnings. They took some of the bad newses, they gapped them to sell them so that it would throw the rest of the community off on their analysis, and their analysis was correct. But the mechanical part was to take it the opposite way. Look at the bull, TQQQ, getting its ass gap down. BIDU reports earnings after the close. There's lots of debt auctions. The 10-year is at its all-time lows. Spain is at 7.5% yields. And we said that that couldn't happen. We also said that the 10-year is at record lows, and that because of the 10-year was going in that direction, that one of the two were going to give. Either equities were going to get slammed, as they are, and it happens on a Monday, and it happens in a pre-market, and the trade management, my friends, is going to be taking the quality, because everything will bounce off of the lower support levels. What we will monitor is on the NASDAQ 100, NASDAQ Comp, and S&P is where they find their support levels as well. So far in the last 6 weeks correction from the bottom up and rollovers, this is still part of that original process. Gap, open, down, NASDAQ Comp, Dow futures over 200 handles down, NASDAQ Composite at 43.8 minus, and worldwide markets are getting creamed, as they should. All of your little European and your Spain little lies that caused the volatility are getting woodshedded again, which is separate from the U.S. The U.S., well, we'll see what they're made of, and how this market can mark itself down to meet the current growth statuses, and how to trade the volatility and make good money off of it. We'll be looking at various setups right now, what the left elbow gap down to support and how they bounce. And just remember, the calls were inflated and the puts were deflated. And there's never nothing wrong with letting the market show its hand and prove itself during that extremely high volatility. We said that volatility will increase, and it is increasing, and it will increase with both the gap down and the gap up. U.S. futures, it's one of the bigger gap downs. This is why you get these bigger gap downs, because when the markets are manipulated, they will give up all those gains and a whole lot more, and you're seeing it now, here and now.